Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
A very good morning. Welcome to Chartbusters. Well, this is the show where we'll highlight all the buzzing stocks. We're coming off a good April series. We were up more than 500 points. And guess what? We start off May series with a gain of close to around 75 points odds. Things looking good, Mangalam. You know, sell in May, go away. Is it going to work?
I don't think so. It's worked in the last 3 Mays. In the last 3 May series, we've gained on an average 150 points. So sell in May, go away. It doesn't work. But the good part is it's a Friday today.
Oh, wow.
And as Fridays, we always talk about cricket and stuff. So I was looking at the contribution chart. It looks like a classic T20 contribution chart as far as the Nifty is concerned. You have the best batsmen contributing the majority of your runs today. So we have Reliance, and then you have ICICI Bank, Axis Bank, and SBI. ICICI Bank and Axis Bank, I would like to call them the Pandya brothers of Mumbai Indians. Both of them coming in and playing a bit of a knock. Then you have SBI and the others. But as we speak, GAIL, that one's not playing too well. In fact, GAIL has gotten a bit of clean bold. In fact, got out yesterday as well for cheap. And currently, that stock is trading at the low point of the day. There you have it.
Yeah, but Mangalam, you know, I think we should pull up that contribution chart again. You know, class is permanent. You know, remember about that. So maybe, in fact, TCS, HDFC Bank, you know, they're not having a good day today. But they're taking a bit of a breather.
They're taking a breather because their friend...
Yeah, I mean, they're saying the other guys are doing so well. The openers have come in there. They're playing a good innings. We'll just take a bit of a break today and let these guys go ahead. And if it's needed, maybe later on, you know, TCS, we'll have HDFC Bank, IndusInd Bank, they'll say, come on, now it's time for us to come and support these ones.
Come and support, you're talking about that one. I'm looking at Maruti because they report their numbers today. Is there a chance that Maruti goes ahead and drives them out as a man of the match? You know, they win those cars and then take a round to the stadium. So let's watch whether Maruti does that or not. But that stock is up about 1.5% as we speak too. But first up, what we'll do is we'll just take a look at all the key headlines that we're watching out for. What's on your list? We have Axis Bank. Actually, Axis Bank has recovered from the low point of the day, topping the Nifty charts despite reporting a quarterly loss for the first time in 20 years due to increased provisioning. The management tells that the worst of asset quality is behind the company.
And ahead of its earnings today, Reliance Industries hits a fresh 52-week high. It crosses the 1,000 rupee mark. Petchem business is likely to drive growth, and the consolidated income will be boosted by Jio's EBITDA.
Maruti too is in focus ahead of its earnings. Company expected to report another strong quarter with a revenue growth of 15%.
And Yes Bank extends gains as brokerages are bullish on the stock. Credit Suisse and Macquarie, they raised their target price on the stock, and its overweight call for Yes Bank from Morgan Stanley.
Earnings impact. Shriram City Union Finance's gross NPAs rise due to the company's transition in gross NPA recognition from 120 to 90 days.
All right, then Okay, all right. I think we're going to be cutting across shortly to the Biocon management. I believe that they're talking. My director says, cut straight to the management.
Details of our earnings, first for Q4 FY18 and later in terms of the year-ended numbers for the full annualized set of financials. So to begin with, let me start by saying we've had a very robust Q4 for FY18. We have delivered a top line of 1,237 crores, which is up 27% year on year. A strong 30% EBITDA growth of 300 crores and an EBITDA margin of 26%. Net profit for the period was up 2% at 130 crores. Our gross R&D spends were 98 crores, whilst our R&D expenses at a P&L level after capitalization was 51 crores. The gross R&D spends reflect roughly 17% of Biocon's revenues. The amount capitalized, of course, pertains to some of our commercialized programs, especially bevacizumab. Now, coming to segmental performance, small molecules saw a small growth of 8% this quarter, delivering 426 crores at the top line. Biologics had a 47% jump year-on-year this quarter, delivering 241 crores. Branded formulations grew 14% to 149 crores. And Syngene had a very robust performance of 45% growth, delivering 409 crores at the top line. So we have delivered across our businesses. Some of our businesses, especially biologics and research services, had a huge contribution to this growth this quarter. And significantly, we have now come back to good growth because of many of the challenges that we witnessed last year behind us. At an annualized level, we have seen a 6% growth year-on-year, delivering 4,336 crores. EBITDA was down 9% at 1,035 crores. Core EBITDA margins were at 27%. Net profit was down 39% at 372 crores. Net profit margins were at 9%. Gross R&D spends at 380 crores reflects a 5% decline in R&D spends year-on-year, whilst R&D spends captured at a P&L level declined 19% to 216 crores. So overall, I think the kind of color I want to give you on the overall business was that last year, our small molecules business was impacted by pricing pressure, and this is reflected in the 8% decline on a year-on-year level from 1,641 to 1,508 crores. We've seen a good increase in biologics this year from 700 to 770 crores. And, this could have delivered a better performance, but we have had to take a plant shutdown in Q2 and Q3 in response to certain regulatory requirements after certain inspections were done last year in preparedness for our entry into regulated markets. And this has actually muted the growth potential of the biologics. But you can see that in Q4, we have delivered a 47% increase in biologics growth. So that basically tells you that we are trending in the right direction now in terms of biologics. The branded formulations business grew 11% year-on-year from 549 to 632 crores, largely driven by our UAE business, where we saw many new market launches this fiscal, including our insulin glargine in the UAE market, which really heralds our first biosimilar entry into the UAE market with Glaricon, which is our biosimilar insulin glargine business. Our research services business actually delivered a very strong, robust growth of 19% from 1,193 crores last fiscal to 1,423 crores this fiscal. We've seen a sharp decline in licensing income, which has certainly impacted our profitability and some of our biologics growth. Because if you look at it, last fiscal we had 145 crores of licensing income, largely attributable to licensing activities in terms of our biologics. Whereas this year we have recognized 23 crores of licensing income, which is a sharp decline in licensing income. Going forward, we are confident that we will be able to address an important set of growth opportunities across our businesses. We expect our small molecules business to continue to show modest growth like it has in Q4. We expect our biologics business to continue to show good double-digit growth this coming fiscal, and if all goes well, obviously there are a number of upsides, which are possible in terms of entering Europe and US with some of our biosimilar products. Insulin glargine, as you know, has been approved by EMA, as well as by TGA of Australia. So we expect to be in the commercialization mode for insulin glargine in the second half of this fiscal. We are, we have undergone regulatory re-inspections by EMA for trastuzumab and pegfilgrastim. We are awaiting the report from EMA, and if all goes well, again, we would be able to address the European opportunities before too long.
All right, so that was Kiran Mazumdar-Shaw indicating that the last year wasn't very good for the small molecules business, some pricing pressure, whereas the biologics business did fairly well. The stock's still under pressure at the low point of the day. What we'll do is take a short break, come back, we talk about the market. Sandeep Wagle join in on the other side with his trading strategy. Stay tuned. A couple of these IT and pharma names are not doing too well. HCL Tech, for instance, should come up for you. That one's at the low point of the day. Along with that, we have Cipla too from the frontliners, which is at the low point of the day. HUL, that one should come up for you after a big move over the last 15 months. HUL is now taking a bit of a breather. That one's too at the low point of the day. So to get some more color on the markets, Sandeep joins us now. Sandeep, last series was a very good one. You were saying that there has been a bit of a breakout. What are your levels on the Nifty as well as the Nifty Bank?
Good morning, Mangalam. I think we have very clearly crossed that 10,630 hurdle, and I think we are heading towards 10,770, 780, maybe even 10,800. So this series I would cap at 10,600, 10,800, and I won't be surprised if we move higher on the upside. Okay. So very clear breakout. Bank Nifty also 25,500, 600 is very much likely.
Sandeep, I just wanted to ask you a follow-up question. You said that 10,630 was broken, on the upside, and that's why, in fact, now we're set to move higher. If someone had a long position, you
not go below that. You can come near that. So any move towards that, one should exit.
Okay. And individual stocks, what are your recommendations?
I would go with obviously all three buys I have got. I would go with a buy in a Balakrishna Industries, stop loss of 1278, target 1320. A buy in a DHFL, stop loss 630, target 663, and a buy in a KTK Bank, stop loss 119, target 135. And all of these calls are for the next 1 to 2 days.
Okay, all right, Sandeep, thanks so much for joining in fact giving us that call. By the way, keep an eye out on PC Jewellers. Remember, the management joined in yesterday, clarified that the promoters haven't sold stake, but they've gifted some shares to a related party. Now, the market seems to have not taken that well at all, because at every increase we are seeing some selling over there. Keep an eye out on that stock very closely. Remember, just a couple of months ago or a few months ago, it was a 500 rupees stock. It's just moving to the low point of the day. The volumes as well very high. I want to know, Mangalam, if it's gifted to someone, is that person still holding the shares? What's happening on that front? Now, these are important.
We need to know what price was the share prevailing at the time he was gifted it as well. Because if that person's sitting on a loss of close to 25-26%, is that person still holding it
or giving that gift to someone else?
Perhaps.
What's happening on there? These are important questions, and the screen is telling you that the street is not very, not happy at all about this move, and that's why the stock, even after such a big correction, moves to the low point of the day.
Coupled with the fact that it's an F&O stock, so, a lot of people would be caught on the wrong side as well. So we'll just keep an eye out on that, extending its cuts. But let's slip into a short break, come back, and we'll talk about one stock which is gaining in trade today. HIL reported a good quarter. We'll get chatting with Dhirup Roy Chaudhary, the Managing Director and CEO of the company. Stay with us.
Then keep an eye out on the screen. Crude prices have been moving higher. Some of these aviation stocks have been getting hit, and Interglobe Aviation is one stock that's moved to the low point of the day as we speak. So just keep an eye out on that stock. But let's get to some earnings. And one company that came out with a very good set of numbers was HIL. It reported a strong Q4 set of numbers. And in fact, for FY18, the EPS was around 105 rupees odd. I remember some analysts, speaking about 110 per share in terms of an EPS for the next year, but they seem to have outdone that. So let's get to the man who's been at the helm for the last 1 year or 15 odd months, Mr. Chaudhary, the Managing Director and CEO of the company. Hi, Mr. Chaudhary. Congratulations, sir. Things have looked good for you for the fourth quarter itself. We wanted to understand, sir, if you could give us a sense, what are the capacity utilization levels of both your divisions? And if you could give us a sense of what's the sales volumes and how do you see it picking up from here?
Thank you, Nigel and Mr. Mangalam. Wonderful to speak to the viewers. Yeah, it's been a good year for us, and I give full credit to our committed employees and loyal stockists who are behind this, and all our customers. So the results from a point of growth has been 14%, and the capacity utilization for the sheeting plant is about 70% at this moment, and for the building solutions, it's about 90% at this moment.
Mr. Chaudhary, if you could tell us some more details as far as your operational performance is concerned, because I look at your building solutions, the EBIT the margins have more than, quadrupled at around 5.8% versus 1.2%. We saw the margins more than doubling in your roofings business as well. Is there scope for more, given that you're already at elevated capacity utilization? What can your margins be going forward?
So we have taken a very prudent step this year to go in for solution sales in all our businesses, and we are trying to develop the margin part from the solution sales. Capacity can always be revamped. We can easily put forward another lamp, but we're waiting for a bit of a consolidation in the market for building solutions before we take on the next step. But in the meantime, we are putting up capacities for enhancing the value for our customers in a solution sale, and I think that's going to definitely keep the traction going from the profitability point of view. On the sheeting, we are only 70% at this moment, so there's a lot of room, and we have also set in a new product called the Charminar Fortune, which is non-asbestos roofing sheet, and I believe that should take traction as well.
How much does that sell right now, the Charminar Fortune, in your sheetings business? What's the revenue mix out there, and what is this? Go ahead.
So it's only just about, put across to the market on the 4th of January. So at the moment, it's going through the seeding process, and we are helping our customers to understand the strength of this product. This will take a bit of a time, but it should definitely settle down very soon.
All right, so I remember you telling us last time around you had undertaken some capex in the pipes division. If you could tell us, has that kicked off? For FY19, what kind of revenues do you see coming in from there? Give us a sense.
So we have expanded our production lineup in the pipes and fitting business. So we have already gone live with the Faridabad factory and the Golan factory. And furthermore, developments are taking place in the Golan factory as I talk to you. This year should be the first year when we will test these new products, which is SWR, pipes and fitting, along with CPVC and UPVC. And the business has shown a 21% growth last year. And we believe that this should grow further this year, sir.
So if you could tell us the size, Mr. Chaudhary, two things. First one, you said that the new product that you've launched, Charminar, how long before that becomes, say, a 100 crore brand? And the second one, this pipe business, what's the sort of salience that you expect coming in from these pipes over the next 2 to 3 years? Say 100, 200 crores, if you could give a number.
So on the pipes business, we are very bullish. We are taking all steps towards developing the brand and marketing strategy, as well as the sales strategy. The quality of this product, as has been vetted by the market analysts, have been very good. So we are definitely hoping to grow at high double-digit number on pipes for the next few years. And the number that you called of 100, 200, definitely we should be overtaking that in pipes. So far as roofing, asbestos, non-asbestos Fortune is concerned, that's a product just getting settled down. So we are testing the waters. We have already approached the institutional customers who have gone away from asbestos, and they're showing a lot of leverage towards that. So this business will grow as we talk. All right,
Mr. Chaudhary, it's IPL season. We can't let you go without talking about that. How is that campaign really, moving up? What kind of money are you all spending? And I'm sure you're getting a good response, isn't it?
Thank you very much. Yes, Mangalam. I mean, IPL is definitely something that we are eyeing very, very heavy on. CSK is performing well. Mr. Dhoni is the brand ambassador for many of our companies in the group. And I think, this has been the first step that HIL has taken towards such a big branding activity. The percentage spend won't be too much, but the mileage
what will that percentage be?
Our smart marketing, it won't be, it will be a couple of % more than what we have been spending earlier in marketing. And you know, the kind of vicinity we are trying to do is to amply put across in wherever we feel our customers would be able to notice us well.
All right, Mr. Chaudhary, would have loved to know more, but unfortunately we are out of time on this show. But good luck for IPL to both you as well as the Chennai Super Kings and the shareholders. Most importantly, they're making 7% today. So let's see what goes on in the future. As of now, this is a wrap on Chartbusters. Stay tuned to CNBC TV18.